primary factor for whether you as an individual or you as a firm or a business should self-custody is, one, what risks are you looking to protect against? And two, are you good at it? If you are really good at it and you are super diligent and hyper organized and you don't want to trust a third party, you should self-custody. If you're not that, then don't self-custody. That's that simple. Way more people lose Bitcoin from messing up their operations than from having it stolen or a custodian blowing up. Custodians do blow up. These things do happen. And I think the hard part for people to wrap their heads around with Bitcoin is it forces you to accept this very uncomfortable truth, which has always existed, which is there's no such thing as zero risk. It's all about trade-offs. What risks are you trying to protect against? You can't protect against all of them perfectly and send them all to zero. The banking system makes you try and feel like that's possible, but we all know it's sort of this house of cards. So yeah, you really just have to be very honest with yourself about what are your competencies and what risks are you protecting against, and weigh those trade-offs.
Tyler Rowe here with the BitcoinTreasuries.net podcast. I've got Alexander Leishman on the show. Welcome to the show, Alex.
Thanks for having me on.
Yes. So this is a exciting episode for me. So a lot of the conversations we have on the show are about, so-called leveraged Bitcoin equity vehicles that have kind of, I'd say, varying degrees of scale on their operating businesses because, those companies have been grabbing headlines, big and small, in the last year, especially, and kind of headlined by Strategy, MicroStrategy, and Michael Saylor, what they've been up to. But what you do at River is obviously something entirely different. And at BitcoinTreasuries.net, we're tracking public and private companies who engage in a whole host of strategies around owning Bitcoin on their balance sheet. So anyone who's been around Bitcoin for a while, of course, knows who River is. But there's lots of our audience, perhaps who came to Bitcoin more recently through Michael Saylor orange pilling them, and they might be less familiar with their business. So can you walk us through maybe your personal Bitcoin journey, how you came to start River, and why it's important for your business to put its money where its mouth is and actually hold Bitcoin?
Sure. So to put it succinctly, River makes it really easy to buy, hold, and use Bitcoin for both individuals and businesses. We serve a lot of small and medium-sized businesses, over 3,000 today, and that's growing pretty quickly. So my personal Bitcoin story goes back quite a ways. I've been more or less working in the Bitcoin space since 2013. Before that, I was very interested in the concept of alternate money, sound money, Austrian economics. I had a pipe dream of creating my own currency that, was backed by commodities. Couldn't really figure out how to accomplish that without going to jail, and realized that this guy Satoshi was a lot smarter than I was and had figured it out. And, just started going down the rabbit hole from there. I had a background in aerospace engineering, but not really in computer science. But Bitcoin kind of got me into computer science, got me kind of hooked. And so moved out to the Bay Area at the end of 2013 to pursue a career as a software engineer in the Bitcoin space. And I've more or less directionally been doing that ever since. I had a short stint going back to grad school. I helped teach the first Bitcoin class at Stanford as a teaching assistant for Dan Benet in the cryptography department. Before starting River, I was working at a fund called Polychain Capital. They were one of the first big crypto funds to kind of realize that this is a sort of an institutional investment opportunity. And I was doing a lot of Bitcoin stuff there and playing around with some ideas. I prototyped some early discrete log contract stuff and things like this. And then I left Polychain in 2019 to start River. They actually led the seed round for River, and also had a number of really great angel investors who've really believed in our vision. The general idea behind River was to build the Bitcoin bank of the world, to take an alternate path from the exchanges. I always viewed what the exchanges were doing as chasing a local maximum, I would say. Chasing quick, very lucrative profit potential, offering this kind of casino-like operation for speculative trades to happen. And if you look at sort of the direction they've gone, they've really had to kind of go full casino. Right now, most of them are leaning into sports betting and things like this. I've always sort of had this idea. Well, one, I sort of felt that was never what I got into Bitcoin to do, right? That just seemed kind of, it didn't sort of light a fire in my spirit, you could say. And so I always thought, well, there's got to be a better way, right? What if someone focused only on Bitcoin? What if a financial institution focused only on Bitcoin and focused more on looking more like a bank instead of a casino? Now, I do want to qualify this. River is not a federally chartered bank. We custody Bitcoin and we work with fiat banks to handle dollars. But I said, sort of, what if somebody took that approach and focused on Bitcoin brokerage, custody, and slowly, bit by bit, just built out a suite of financial services around this new store of value that I believed that people and businesses would increasingly save in. And that's the general idea behind River, and that's really been the idea since the very beginning. It hasn't really changed, and we've just iterated on that for the last 7.5 years. Today, we have over $2 billion of Bitcoin under custody, and a lot of cash as well. A lot of people keep their cash with us because we offer banking services. You can get your paycheck sent to River. You can pay your bills from River. You can earn a high yield interest rate on your cash paid in Bitcoin. So we are, really seamlessly merging both dollars and Bitcoin for what we call the dual money era, right? Where people and businesses are increasingly save in Bitcoin, but continue to largely spend and earn in dollars. And that's the high level idea behind River and our vision. The long term view for River is to look really more like a bank than an exchange, to put it shortly.
That makes a lot of sense. So obviously, you're a Bitcoin native company. You understand the value proposition and the store of value component to Bitcoin and spending the weaker currency, which is dollars or fiat generally. How do you manage your Bitcoin treasury? Versus holding on to cash balances for day to day expenses. And what's I guess the strategic vision for River, Alex?
Something unique about River is we're very transparent. So not only do we do a proof of reserves for our depositors, our clients who have Bitcoin with us, we prove every month we have the Bitcoin. We're also transparent about our own financials. So we publish our financial statements every year, which includes, and our corporate treasury includes both cash and Bitcoin. And the high level, sort of the grug brain idea behind that is, well, if this Bitcoin thing doesn't work, River probably isn't going to work. But if Bitcoin really does work, then we might as well compound our returns at River and also hold Bitcoin ourselves. But there's also a lot of other benefits. We're very risk averse. We run a very conservative operation. We keep our money split up amongst multiple banks, right? And then having like a corporate treasury that's also with risk profiles totally orthogonal to banks is very valuable, right? Just having this stash of liquidity that we can use without anyone else's permission is just like feels really good. We run our own custody system, so it's really there really is no third party involved. And most companies can't say that they have a pile of liquid assets that they could access without a third party stopping them, right? So yeah, and then also cash is a melting ice cube. We've done the analysis. If Apple had just kept a single digit percentage, about 2% of their corporate treasury in Bitcoin, their treasury would have outperformed inflation, over the last 5 or 6 years. And so really it's also just a long-term, basic intelligent treasury strategy for our savings. Our purchasing power as a firm is a lot stronger because we've saved in Bitcoin over the years than if it would have been if we had just held dollars. And that's why small and medium-sized businesses are increasingly opening accounts with us because they're realizing keeping their entire corporate treasury in a banking account at where they're probably earning very little interest and maybe even paying fees every month to their bank is not a winning strategy.
I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-treasury to connect with their team.
It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull the collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
I guess that opens up a couple questions about custody and proof of reserves. Maybe we can talk about custody first, Alex. There's probably different custody solutions that make sense for different scales of companies. If I'm a private company that's just starting out to with maybe a Bitcoin treasury strategy, how do you think that scale compares? And what's the point when maybe a simple self custody solution maybe doesn't make sense for a treasury that hits a certain type of scale, or is self custody something that every company should explore?
Well, my answer just about self custody is it doesn't really like scale is kind of irrelevant. I mean, it's relevant, but it's not the primary factor. The primary factor for whether you as an individual or you as a firm or a business should self custody is one, what risks are you looking to protect against? And two, are you good at it? If you are really good at it and you are super diligent and hyper organized and anal and you don't want to trust uh, a third party. And by the way, I'm not saying this to sound like, oh, no one should do this. There are a lot of people like this, right? We serve a lot of people like this, and it's great. They are super organized, they're super diligent, and they go, you know what? I trust myself more than I'll trust anyone else. Amazing. You should self custody. Um, if you're not that, then don't self custody. It's that simple. If you don't want to trust a single firm, split your deposits up. The thing is, the biggest way more people lose Bitcoin from messing up their operations than from having it stolen, right? So, um, or a custodian blowing up. Custodians do blow up. These things do happen, and I think the hard part for people to wrap their heads around with Bitcoin is it forces you to accept this very uncomfortable truth, which has always existed, which is there's no such thing as zero risk. It's all about trade-offs. What risks are you trying to protect against? You can't protect against all of them perfectly and send them all to zero. The banking system makes you try and feel like that's possible, but we all know it's sort of this house of cards and, um, like the SVB thing. And, time and time again, we get reminded, well, maybe this thing isn't as sound as we thought. So yeah, you really just have to, be very honest with yourself about what are your competencies and what risks are you protecting against and weigh those trade-offs.
That's a really good point. I think Bitcoin launching kind of in the wake of the great financial crisis was really high signal. It's like, okay, yeah, there are huge systemic risks in this massive, fiat system that we have. And like you said, we've been reminded of that time and time again, I think during COVID and with the SVP and First Republic situations that happened in 2023, I believe it was, those are good reminders that the systems that we take for granted um, aren't as sound as they can be. And I think, at some point, there's of course going to be more crises down the road. I think that's inevitable with fiat. And as Bitcoiners, we're I kind of more keenly aware to that. And how do you position that? There have been so many warning signs for people who are paying attention. Um, but I still think the average American, the average person in a Western country still doesn't understand the risks. Is there some responsibility on everyone to understand that? Or, I think so many people have just outsourced their knowledge or outsourced their understanding of money that we're so far removed self-custodying an asset like Bitcoin? How are the minds and hearts changed of the everyday citizen?
I think the answer is like they're not really, right? You can move the needle for sure, and I'm not saying no. Way more people care about sound money today than they did 10 years ago, right? The needle can absolutely move, but you're never going to move everyone. You're not even going to move a majority. You need to move like a critical mass of a small number of high impact people who care enough. And then the trends will start to shift. But the reality is, I think humans tend to bias what they care about as like their opinion on what everyone should care about, right? For example, like we're saying, well, everyone should care about sound money. Well, yes, but that's because we're really interested in this. But like someone could say, well, you should know survival skills. That's more important than sound money because you need to know how to survive in the woods if something happens. And they're also not wrong. And then someone should say, well, you should really know how to cook, or you should really know how to build a house because what if you need to build and like so there's all these skills, and like we're just sort of like everyone just speed runs Adam Smith and like specialization of skills. It's like actually you should just do what you're really good at in life and what brings you passion. Yeah, like pay attention, don't be ignorant, try and learn, but like at the end of the day, you have to be able to trust other instincts, or sorry, other institutions, and outsource some aspects of your life to other people, or you're not going to get anything done. And that's where we come in. That's where River comes in. Is like we're just say, hey, you should learn about Bitcoin, but like you don't need to become a deep expert in this. If you want to, we'd be happy to help. But kind of the value we provide is you don't have to be. Just like that's the value a restaurant provides. You don't want to have to learn how to make Chinese food. You just want to go to a Chinese restaurant.
Those are really good points, and I think something, being in circles that are so ideological like Bitcoin or maybe free market economics, we so often take for granted, and you could see why, maybe a lot of like legacy people in legacy economics or legacy financial systems this could be off-putting, these types of discussions, because it becomes kind of just a feedback loop, and it is important, I think, to have that step back and say, yeah, focus on what you're good at, and we can only change the world in our small sphere of influence, and some of us have a larger sphere than other people. But when we all work together, that is the value proposition of a free market, is that the specialization of people just really gets things done at the end of the day. I do want to step back and talk about your proof of reserves. How important do you think this is for, especially as we see a lot of these companies that are treasuring Bitcoin that are growing massively in size and scale, Alex, like Strategy, like 21. We've got Metaplanet, Strive is on the rise. There's companies holding tens of thousands of Bitcoin on their balance sheet. Is proof of reserves important for them? Obviously you can't speak for their company, but how important is it for the network and for kind of building trust in and around Bitcoin?
I tweet a lot about how important proof of reserves is, and to be clear, when I'm tweeting about that, I'm talking about financial institutions, custodians. So I'm talking about exchanges, custodians. They should be proving their deposits are there to their clients, right? I think when you're saying, well, every like, I think it would be kind of absurd to say everyone should prove how much Bitcoin they have. Um, when asked, right? I think that's like private individuals should be able to stay private. Now, I think like it gets a little murky. Okay, if you're a public company and you're claiming to hold a lot of Bitcoin, should you cryptographically prove that? Look, I think it's like my take on that is like if the market demands it, it should be in your interest too, right? It should help you but at the end of the day, like, do I think that public companies using Coinbase custody are making up their Bitcoin holdings? Like, I think that's really unrealistic. Like, it's like the auditors literally are going to log into this account, see all the addresses in the Coinbase custody, and see that all the Bitcoin is there segregated in these addresses. Like, it's not like, you know. But if their shareholders are demanding it, that's between them and their shareholders. So I would say, look, if I was doing this, I would probably do that because why not, right? It seems like transparency is rewarded in the market, and I would do it. But I also don't think it's like introduces some massive risks for them not to.
Yeah, that makes sense. There's been a lot of, I would say, kind of heated discussion about that, especially around strategy, and whether it puts them at risk, or more makes them more susceptible to any types of attacks on their stack. But I think you're right. The market has really valued transparency. I think a company like Strategy has been relatively transparent in a refreshing way compared to some public companies. They have lots of filings. Much of that is to stay compliant with the SEC, but I think the dialogue that Michael Saylor has with his shareholders is something you don't see every day. When you think of an exchange like Coinbase, who obviously holds a decent amount of Bitcoin themselves, but also so much Bitcoin on behalf of their clients. Do you think it's realistic for an exchange of that, call it complexity, to do a proof of reserves attestation as well?
I mean, the short answer is it's a lot harder than it is for River, right? Now, there's a more complex answer. So Coinbase is doing sort of implicit proof of reserves for their institutional clients through segregated custody and Coinbase custody. So if you have a Coinbase custody account, you can see, the addresses that your Bitcoin is at, right? So that's pretty good. That's pretty good. It's better than nothing. Um, but you have all these retail clients who don't have access to that because all of the funds are pooled because you need to provide the product experience of trading, right? It's really hard to provide a trading product experience with segregated custody because like
Yeah.
you can't just click a button to sell. The Bitcoin's over here in an address. You got to move it out, right? Um, so that's where I think like they really should, at least for the Bitcoin. It's but you can imagine a company like that. It's so big and there's so many different product lines. It's a lot of work. So maybe it'll come someday. Block doing it was really big. But again, like the Bitcoin only thing, one of the major business benefits of being Bitcoin only is one, it's like the main asset everyone really wants. And two, it drastically simplifies doing things like proof of reserves. I can't imagine having to do proof of reserves across 1,000 different blockchains. I mean, I would rather, eat a cactus. Um, and, so like I get why they don't do it.
Yeah, that sounds like a nightmare. But yeah, I'd love to see them. If someone from Coinbase is listening, I'd love to see you guys do it for your Bitcoin. I think it would be a good signal to the market. As we've seen, kind of this, we've called it a Cambrian explosion of companies that are treasuring Bitcoin, and a lot of that, Alex, as we alluded to, has been kind of this leverage Bitcoin equity play that became hot in the market. There were a lot of like, I would say, pretenders who just latched on to what was popular in the moment in a way to maybe a last gasp effort to save their company. They tried to raise capital this way by latching onto this Bitcoin leveraged Bitcoin play, and some of those companies have already capitulated, sold their Bitcoin, and some of them have had major impacts on their stock price, and some of the ones who I think were more serious with their strategy still got kind of killed with their share price from obviously the peaks. So that's kind of what I'm doing here at Bitcoin Treasuries, is trying to shine a light on what is the signal, what's the noise, and how should you even look at investing in these types of companies. You got to know what you're investing in. I've been burned on that throughout my history. Several times, completely in my own fault. But as more of these companies acquire big stacks of Bitcoin, specifically Strategy. Strategy's become a really big economic node in Bitcoin. They're over 4% of the Bitcoin supply at this point. I think a million Bitcoin on their balance sheet is right around the corner. And Michael Saylor's said, we want to own 2 million Bitcoin. So they're certainly showing there's a persistent bid, at least right now, on Bitcoin from this treasury play from Strategy. With them being such a big economic node, do you think there's any responsibility there for a company like that to weigh in on any policy changes to Bitcoin or changes to Bitcoin's core software? In the news, spam filters have cropped up over the past couple of years. We've got the quantum issue that's been kind of like looming and talked about in Bitcoin. In yourself as a company that treasuries Bitcoin, do you think these companies should weigh in, shouldn't weigh in, um, on these policy decisions?
I almost feel like it's the wrong framing. Um, it's like what can happen is what will happen, right? So I think with Bitcoin, there's no it's a very sort of, you know, what's that Assassin's Creed quote? Like, uh, every like everything is permitted and nothing is true, right? Like I think Bitcoin is like what happens will happen. There's no rules to say someone can't do something. Saying someone shouldn't do something also doesn't matter. Like they will. If someone cares enough about Bitcoin, they will. They are a political actor, right?
Mhm.
Um, my favorite definition of politics is how humans socially coordinate to create rules. So Bitcoin is a political project, right? It is very loose and hard to understand how those politics work, and it's constantly changing. So anyone who's sufficiently invested in Bitcoin has every reason to be a political actor in the project. And so I think that so they will be, right? They will share their opinions. And now the thing is, and it's weird about Bitcoin, it's not like the people who have more Bitcoin get more of a say necessarily. It doesn't really work like that, right? It's this really hard to grok thing where like, well, it's who can influence consensus, which is not the same as who has as much Bitcoin, the Bitcoin, right? So I think the short answer is they will share their opinion. I don't think that's a bad thing, and I think that it will be definitely like an important part of the conversation.
So speaking of opinions on that, I'm gonna I'll grill you on it a little bit, Alex. What are your thoughts about the whole quantum debate? I think there's a lot of noise there and different incentives with people talking about it. But how real is the threat? I guess to Bitcoin's uh, key security and how much should we be paying attention to this right now?
Yeah. So look, the short answer is it's relatively unknowable, which is I think what is why this debate is so challenging, right? Um, there's also high information asymmetry, meaning there is a very small number of people that deeply understand this field, right? Deeply understand quantum. Um, and the incentives of those people are also like a little bit odd to reason about as well, right? Some of them are highly incentivized to always have you believe and this is right around the corner. Some of them are probably more sort of honest observers. And, there are honest observers, I believe, who do genuinely believe that this is gonna like, a cryptographically viable quantum computer a relevant quantum computer will, you know, has a decent chance of existing in 5 years. I can't tell you that is a 0% probability, right? So I think logically, we should be working towards a quantum secure signature scheme. I think it's going to take time, and I think we should be putting some resources into it. But if you had to ask me to bet, would I bet that a cryptographically relevant quantum computer is going to exist in 5 years? I would bet no. But it doesn't mean it's not going to happen. And so I'm happy with what sort of the trajectory right now. We have some smart people working on the cryptography, working on um, a post quantum signature scheme. We have sort of some of the sharpest minds in the cryptography world focused on this. And the general consensus, by the way, amongst almost everybody, is that it is far riskier to rush a change than it is to take your time, right? Because if you move too fast, the chance that you just introduce a vulnerability that a classical computation vulnerability, uh, or just a bug, is a lot higher than the chance a quantum computer comes and starts stealing everyone's Bitcoin. So basically, I think the direction we're looking at right now is probably about right. I think if I had to guess, I would like to see a hash-based signature scheme put into Bitcoin. There are downsides. The benefit being that it doesn't introduce any new cryptographic assumptions. All of the other post quantum signature schemes have other benefits. They're like mathematically more elegant. They're probably more user friendly, but they introduce new mathematical assumptions that never existed before. And sort of who's to say that those are safe? They haven't been as vetted as elliptic curves, for example. So I'll stop there. Overall, I'm not worried.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin Treasury, there's a Coldcard for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The tip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market leading rates at every size. You can learn more at archlending.com.
Yeah, no, that's good perspective. And do you think there's a cultural reason why Bitcoin, I guess, is so conservative? I guess with upgrades, especially relative to you know other coins that kind of move faster. Again, we're kind of focused more on Bitcoin only here, but it does seem some of those coins that are more centralized are more willing to enable more programmatic changes. But I think it's refreshing that Bitcoin is so conservative with its upgrades, but that doesn't mean it can't move fast. If the need arises.
Well, I think the reason for that, I think a little bit of it is survivorship bias, right? Bitcoin is successful because it's conservative. And I think that the culture on Bitcoin has always been sort of a higher caliber of engineering has gone into it. The engineering culture of Bitcoin is higher caliber because it deeply understands complexity. And complexity is something that, it's easy to look at something really complicated and say, oh, wow, whoever built that must be a really good engineer. But actually, really good engineers know that the complicated stuff is built by bad engineers, right? Simplicity, elegance, and focus is the key to any high-quality system. And that's the Bitcoin culture. And everyone who's worked on the project from the beginning, I think, not everyone, most people deeply understand this and understand the cost of adding a new degree of freedom, of adding a new knob or button. The cost of that is very expensive. And anyone who's built systems, I think, has learned this the hard way. And so, I'm glad to see Bitcoin continue to have that culture.
Me as well, Alex. Um, I read some of River's research that covered like we have at Bitcoin Treasuries, how companies acquired 800,000 plus Bitcoin in 2025, but individual wallets were shedding, almost an equal amount of Bitcoin over the past year. And as I look over my shoulder, Bitcoin's price is down over the last week or two as well. Back in, we're still kind of floating around those all-time highs that we hit in 2021. Of course, it's impossible to know exactly why price action is moving, week to week, month to month, and even sometimes year to year. But what's your take on why I guess we had maybe a more suppressed cycle in price this time around than some people might have expected? Was it simply a matter of, some long-term holders just shedding more coins than people probably thought was possible?
I think the hard thing about Bitcoin is, especially with Bitcoin, is because there's so many trading venues, right? No one really ever has the full picture about, well, what's happening. I do think there are some truths. There are a decent amount of early individual holders who sold. So that definitely happened. I've heard stories of, a few big whales selling, and I think that's true. Retail Bitcoiners, I don't think were major sellers, like sort of regular average people who've bought Bitcoin in the last 5 to 10 years, I think that if anything, there was still some net accumulation there, or sort of 50-50. And then I think institutions, so some bigger institutions, recently have been selling as well, based on the ETF filings, like, some of these endowments and such. Um, so, what is the reason for that? Was 100K like this psychological threshold that people went, fine, okay, now I'm good. Like, I'm older, I want my private jet, um, and I'm out, or I'm at least cashing in half or something, right? Maybe that's what happened. Um, I also think that there's a few other realities. AI is just like, there's now sort of these technical advances that give people hope about the future, AI, space, things like this, that the market is now rallying around. Before, kind of crypto slash Bitcoin was the only sort of really like new interesting meme, right? In the tech space, and the investable, like, wow, this is like so cool. And that's no longer the like, the meme anymore. And so I think all of these things are true. But at the end of the day, Bitcoin Bitcoin's first principles have remained unchanged, right? Every asset goes through its peaks and valleys, and is like the hot girl, and no longer, right? Go back and forth, and so I'm not worried. I think Bitcoin is going to continue to stay strong. I don't know how long this bear market will last, but the first principles are the same as they were, 15 years ago, right? And I don't see that changing anytime soon.
When I think about, the last, I guess, year and a half, especially, we've seen a lot of regulatory shifts, some tonal shifts from the United States government. And I think, Bitcoin is certainly neutral money and money for everyone. But um, I think we're at a point where U.S. holders of Bitcoin have kind of cemented an advantage. And I've heard you kind of talk about this before, Alex. How interesting have the changes that we've seen politically around regulation, by enforcement being, I guess, hopefully a thing of the past. How much risk is there, when we have a regime change from the current administration to maybe, a Democratic president or a Democratic Congress that may be, I would say, less dovish to Bitcoin, if that's a fair way to characterize it. Do you think there have been meaningful changes on the policy front that can last?
Yes, I think the ship has sailed. I think that a new administration is not gonna spend their time trying to come after Bitcoin. Like, we've sort of permanently won, at least like our ability to have bank accounts, and have this thing institutionalized, with the ETF, and everything else. So I just look at incentives, right? If sort of, let's say, sort of worst case, some very left wing regime comes in, and they want to like scorch earth, like, you know revenge on any Trump thing, right? Even then, though, like, what are they going to choose? They're going to choose things, at least, that are politically viable. And like, who's going to vote for them because they're going to come after Bitcoin? Like, no one, they're not going to win any votes because they're going to do that. So I just don't think they're like heavily incentivized to do that. Um, I think there's like a lot of other things they would do, taxes, immigration changes, things like that. Maybe it'd make our lives a little harder, but I think if a new Democratic administration, our lives would be easier there than they were in Trump 1, right? I think a lot of people forget, like, Trump 1 was not friendly to Bitcoin at all. Mnuchin hated Bitcoin. They were heavily anti-Bitcoin. Trump was anti-Bitcoin. So, I think it's always going to be better than it was.
Yeah. Yeah, that makes me very bullish on the rate of Bitcoin adoption. It always takes twists and turns that we never expect. But yeah, I think the institutionalization was always inevitable. I didn't see it playing out certainly the way it has these past few years. And Bitcoin always surprises you. Um, like I said, it's hard to predict, and I'm not trying to play a gotcha here, but how do you think the landscape of Bitcoin's adoption goes from here, Alex? Do we see, like you said, like you outlined before, you said, if Apple had had just 2% of its Bitcoin, or of its treasury in Bitcoin, it would have outpaced inflation, which is, just amazing. Like, do we see something Bitcoiners I think have always talked about is this pipe dream of companies that are large just putting Bitcoin on the balance sheet. We saw, Figma IPO,
Well, SpaceX,
at a SpaceX.
SpaceX is
Yes.
about to get
Yeah,
IPO.
there's a couple out there. How does that happen? How do more of the companies out there realize that if you're going to have a treasury, it makes sense to at least diversify into Bitcoin?
I think it's just one step at a time. The reality is, in my experience, trying to convince institutions to buy Bitcoin is very difficult. It's not impossible, but I personally don't even bother. I think it's kind of a waste of time. I don't even really care. People, humans, individuals care about Bitcoin. And so at the end of the day, the businesses, the institutions that have Bitcoin have it because they're run by people who like Bitcoin. And so, what I call it is the orange pill dictator. If a firm is run by an orange pill dictator, then they will buy Bitcoin. Saylor, Elon, River, the construction company in Ohio that's run by a guy who loves Bitcoin, the dentist office in California that's run by a dentist who likes Bitcoin. It's always run by an orange pill dictator. So over time, more and more businesses will be run by orange pill dictators, and more businesses will own Bitcoin. And that's I think how it happens.
I want to circle back here before we close this off, Alex, to your Treasury disclosure. We announced that in partnership with you that you guys are custodying. I think it was 437 Bitcoin, if I have my number right. Um, you know, what's the importance of private companies really coming forward with that? Is it important to you that more companies kind of come public with this, not just for proof of reserves and whatnot, but being maybe a catalyst for broader adoption?
Well, I think it's nice when they do, like, because I think it signals to others that, "Oh, I can do this too." Like, when if a dentist or a t-shirt manufacturer, they're public about, hey, we hold Bitcoin, then all of a sudden other people running, businesses like that are going, hold on a second, like I can do that. Like I have Bitcoin, but I never thought I could put it in my company. Like, huh, interesting. So I think it's great when it happens, but at the same time, we're very respectful of our clients' privacy. There's a lot of good reasons to not want the public to know about your company's finances, and so yeah, but I think it's great when people do choose to do that.
For our audience, Alex, can you can you tell businesses and individuals who are interested in River and the solutions you provide, where can they find out more about your business? Where can they follow you online?
Yeah, so you can check us out at river.com. We're at River on Twitter. You can search or my last name at Leishman on Twitter. Um, and yeah, we also put out a lot of research. You can go to river.com/research if you're looking for our latest research reports, information about Bitcoin holdings, across the United States, around the world, the Lightning Network, things like this.
Great stuff, Alex. Thank you so much for joining us. Definitely check out those research reports. They're high signal, and we'll put all of those links in the show note. And one thing I have all my guests say, Alex, before they leave is stay orange.
Stay orange.
Right on, ladies and gentlemen, Alex Leishman.